Investing for beginners, starting in 2026, a realistic path to $1 million. Welcome, future investors. Today, we're going to explore a goal that might sound ambitious, but is entirely possible with the right strategies, making $1 million starting in 2026. Whether you're starting with $20,000 or $100,000, there are tailored paths you can follow. Investing is a journey, not a sprint. It's about understanding risk, making informed decisions, and taking consistent action. By the end of this session, you'll have a roadmap to grow your wealth systematically, suitable for your starting point and risk tolerance. Part 1. Understanding the basics. Before diving into strategies, let's establish the foundational principles every investor should know. The power of compounding. Compounding is your best friend. Simply put, it's earning returns on your returns. For example, if you invest $20,000 at an annual growth rate of 20%, in 5 years it becomes roughly $53,919, and in 20 years, more than $1 million. The key is to start early and let your investments grow over time. Approximate annualized returns last 10 years. Nasdaq Composite, 15.8% annualized return. S&P 500, 12.1% annualized return. The real secret: time plus consistency plus reinvestment. Risk versus reward. Higher potential returns come with higher risk. Stocks and options can offer big gains, but can also lead to losses. Bonds and ETFs are lower risk, but generally yield lower returns. Knowing your risk tolerance is crucial. Diversification. Never put all your eggs in one basket. Spreading your investments across sectors, industries, and asset classes reduces risk and increases the likelihood of steady growth. Setting realistic goals. Making $1 million in a few years is ambitious but achievable. Break it down. If you start with $20,000, you need a combination of aggressive growth strategies, consistent saving, and disciplined investing. Realistic goals. Turning $20,000 into $1 million in 5 years is extreme risk and luck. Turning $20,000 into $1 million over 20 years? Very realistic with discipline. Wealth building is a marathon. Education and mindset. Learn about the stock market basics: ETFs, individual stocks, index funds, and options. Follow market news from reliable sources like Bloomberg or CNBC. Join beginner investing communities, forums, or local investing groups. Part 2. 2 levels of starting capital. Not everyone starts with the same amount of money. Let's divide beginners into 2 categories. Level 1, $10,000 to $50,000. Moderate capital can take calculated risks with higher returns. Your main tools are education, high growth opportunities, and disciplined saving. Level 2, $100,000 plus. Larger capital, ready to deploy into diversified strategies. We'll explore strategies for each level. Part 3. Level 1. Moderate starters, $10,000 to $50,000. You have some capital, you can afford to diversify and take calculated risks with higher returns. Your main tools are education, high growth opportunities, and disciplined saving. Step 1. Portfolio allocation. 50% in ETFs and index funds, stable growth with broad market exposure. 30% in individual growth stocks, companies with strong earnings growth like tech, green energy, or biotech. 20% in alternative investments, crypto, or high-risk options. Step 2. High growth techniques. Swing trading. Buy low, sell high within weeks or months. Requires technical analysis skills. Option strategies. Covered calls. Earn extra income while holding stocks. Protective puts. Limit losses on volatile stocks. Dividend reinvestment. Focus on stocks that pay dividends. Reinvesting them can compound your growth. Step 3. Risk management. Never invest money you can't afford to lose in high-risk assets. Regularly review and rebalance your portfolio. Projected growth for Level 1. Annual growth 18 to 20%. Starting capital, monthly contribution, after 5 years, after 20 years. $20,000, nil, $53,920, $1 million plus. $20,000, $1,000 per month, $155,670, $4,166,200. $50,000, nil, $134,790, $2,641,370. $50,000, $2,000 per month, $338,310, $8,860,680. Key takeaway: with moderate capital, disciplined investing, and calculated risk-taking, reaching $1 million in a few years is feasible. Part 4. Large starters, $100,000 plus. If you're starting with substantial capital, your strategy focuses on high-return investments, diversification, and professional guidance. Step 1. Diversification across asset classes. Stocks, 40%. Focus on a mix of growth stocks and value stocks. ETFs and index funds, 20%. Stable foundation for long-term growth. Real estate, 20%. REITs or rental properties can generate passive income. Alternative assets, 10%. Crypto, commodities, or private equity. Cash reserves, 10%. For opportunities and emergencies. Step 2. Advanced growth strategies. Options and leverage. Strategies like spreads, straddles, and collars can enhance returns with controlled risk. Private equity and startups. Allocate a small portion to promising startups or venture funds. High risk, but potential for exponential returns. Real estate development. Invest in emerging markets or commercial properties for appreciation and rental income. Step 3. Tax efficiency and professional advice. Utilize tax-advantaged accounts and strategies to maximize net returns. Consult financial advisors or portfolio managers to optimize investment strategies. Projected growth for Level 2. Starting capital, monthly contribution, after 5 years, after 20 years. $100,000, nil, $269,590, $5,282,750. $100,000, $1,000, $371,350, $8,444,230. $250,000, nil, $673,990, $13,206,880. $250,000, $2,000, $880,920, $19,529,844. Key takeaway: with substantial starting capital, a combination of diversified investments, tax-efficient strategies, and professional guidance can accelerate wealth growth toward $1 million. Part 5. Strategies for all levels. Regardless of your starting capital, there are universal principles that can help you reach your $1 million goal. Invest early and often. Time in the market beats timing the market. Automate contributions. Set up automatic monthly investments to enforce discipline. Stay educated. Markets evolve. Stay updated on trends, new investment vehicles, and economic developments. Manage emotions. Fear and greed can destroy returns. Stick to your strategy even in market volatility. Track your progress. Review portfolio performance monthly or quarterly. Adjust allocations as needed. Part 6. Tools and resources for beginners. Brokerage accounts. Platforms like Fidelity Investments, Charles Schwab, and Robinhood offer easy access to stocks, ETFs, and options. Investment apps. Fractional investing apps for small starters like Acorns, Stash, or M1 Finance. Educational resources. Books, The Intelligent Investor by Benjamin Graham, and Common Stocks and Uncommon Profits by Philip Fisher. Podcasts: Invest Like the Best, Motley Fool Money. News platforms: Bloomberg, CNBC, and Financial Times. Part 7: Realistic Timelines and Expectations. It's important to stay grounded. Making $1 million in a few years requires consistency in saving and investing, strategic risk-taking, especially in growth assets, patience and avoiding impulsive decisions. Even if you don't hit $1 million exactly in a couple of years, the skills, habits, and knowledge you acquire will set you up for long-term financial success. Conclusion: reaching $1 million is less about chasing 20% returns and more about consistency, patience, compounding, risk management, and increasing income. Whether you start with $20,000 or $250,000, the formula is simple. Invest regularly, diversify intelligently, let time work for you. Wealth is built steadily, not overnight. If you'd like to learn about promising stocks, ETFs, and strategies to take advantage of potential market corrections or crashes, make sure to watch our upcoming video. We'll break down practical opportunities, risk management techniques, and how to position your portfolio during volatile markets. If you found this video educational and informative, don't forget to like and subscribe so you don't miss future content designed to help you grow your wealth with confidence. Disclaimer: the content in this script is for educational purposes only and is not financial advice. Investing involves risk, including the risk of loss. Always do your own research and consult with a licensed financial professional before making investment decisions.